and personal income up 0.4%. Forecast was up 0.5%. So decent numbers there also.
Okay, so in terms of PCE, like you said, this is still that catch-up data that we're getting. It gives us an indication that things aren't too hot, but still not the level that the Fed would be looking for when you think about, their target and this being their preferred inflation gauge. We also got durable goods orders out. Take us through that.
Durable goods up 0.4%, just about 0.1% below expectations. Previous was up 1%. Remember, this number is highly objectionable just due to the transportation component within the durable goods. This is delayed data here at this point. So, yeah, no real shock there. Durable goods actuals came in flat. Forecast was up for 1.1%. So, yeah, coming in, this is durable goods, kind of the number that kind of gets looked past for the most part, but it kind of is reflective. And just like the PCE data that's coming in, personal spending continues to be pretty robust. We keep on talking about the K-shaped economy, but at the same time, there still is out there, or still spending out there, so it's helping support the economy. I think if you look at GDP Q4, this is a second read on Q4 GDP. These are also lagging numbers, up 0.7%. That is far below or cut in half of what we had on the first read of 1.4%. That might be a concern moving forward here, because GDP estimates have started to come down due to the conflict with Iran, due to the higher oil prices. That's, I think, one of the concerns I think that you're going to have to start looking at, because we were looking just a month or two ago, we were looking at really robust above projections as far as GDP for the rest of the year, right? The tax cuts are coming into play, the big, beautiful bill. This is definitely a concern on that second read.
Yeah, this that stands out to me because it's down from the previous reading, and also weaker than expected on GDP, along with the concerns that we'll see some impact to growth because of these high oil prices and the ripple effect in terms of gas prices, right? Although the way the market seems to be pricing it is that the conflict will be short-lived, but at the same time there's going to be some impact to economic growth, and it looks like growth is slowing sharply in terms of the headline number. Again, I know this is catch up, but one thing that stands out to me is consumer spending was still positive, so that matters, but it's less strong than previous to what we've seen. Final thoughts, Tom?
Yeah, you make a good point. The economy is 2/3 of what the consumer is doing, and the consumer's still out there spending at this point. I think one of the caveats here, Diane, and everybody's concerned about these rising oil prices, rising fuel prices, how that parlays into what we're seeing. And it's not only going to hurt the consumer, it's going to hurt the corporate side of it also. They're going to probably decrease their margins. We've seen that reactions in airlines. We've seen it in cruise lines. A lot of the travel stocks also that are going to be negatively impacted by this. So it runs down the supply chain pretty robustly. Now, I read a note out of Piper Sandler this morning that said, hey, unless we get sustained over $100 a barrel for crude oil, maybe into the start of the summer or something like that, it's going to have negligible impact to consumer spending in the near term. So that's a positive right there. We're seeing a little bit of weakness here with crude oil down 1.5%, but that's going to continue to direct what goes on in the equity market. We know that yields continue to rise. That's putting, a little bit of headwind into equities at this point. And the S&P 500 right now is going for its third straight week of losses in a row. That's the longest streak we've had in a year, Diane. So there are some concerns out there, but hey, Diane, we're still only about 4.5% below all-time highs for the S&P 500. So resilience here in the equity markets, which, despite all the uncertainty, continues to be an area where people are looking to probably buy dips at this point.
Okay, that's a good point. And then another bright spot, as you mentioned, but it's something obviously to keep our eye on, business investment. So that accelerated in terms of GDP. So, but to your point, we have to keep a watch on that and see if there is any pullback given the potential impact to growth going forward. But, so we know there is still some AI infrastructure spending happening. We know there's corporate CapEx that's being outlaid. we'll see going forward what that looks like. But that's still a healthy signal in terms of what we see in this GDP report. We'll leave it there for now. That's Tom White, co-host of Fast Market. You can catch Tom and I later today, noon Eastern time. Coming up, we'll dive into international markets and the rotation that many U.S. investors have been making towards overseas equities. There's been some turbulence there recently, but still outperforming U.S. markets. That's next on Morning Movers.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy. It's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren, planning for their college educations. Someday it'll be their turn.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com.
Welcome back to Morning Movers. I'm Diane King Hall, coming to you live from the floor of the New York Stock Exchange. Joining me now to discuss the recent outperformance we've seen in some international markets. We want to welcome in our next guest. That's Paulina McPadden, Investment Manager, Concentrated Growth Strategy at Baillie Gifford. Paulina, thank you so much for joining us this morning. Now, no matter the market, whether we're talking about U.S., Asia, or Europe, there's turbulence recently due to these higher oil prices. Still, overall, there has been some outperformance, even with turbulence recently. Kospi outperforming, the Nikkei 225 also outperforming the S&P 500. How should investors think about international markets right now?
Well, I think the best way to frame this is to look at the fact that 26% of companies are American, but U.S. companies represent 62% of the global market cap. And that valuation disparity, I think, creates a really rich hunting ground for us as international equity investors. So that's the first point. And then the second point is that there are some companies in international markets that are genuinely not replicable in the U.S. Equity market. So, for example, the financial ecosystem in the U.S. and developed countries is very well developed. There's a lot of services that are available for consumers. That is not replicated in emerging markets such as Latin America, where genuinely unique companies like Nubank, for example, are able to disrupt incumbent banks that either don't provide the appropriate services or do so at extremely high cost. And Nubank is now growing 40% and accelerating because it's able to provide more services at a lower price point and, importantly, from their perspective, at a lower cost to serve as well.
Okay, so you mentioned financials, but I also think about AI. We've got NVIDIA coming up, their GTC conference next week. It's a big, focal point there. There's been a lot of, obviously, excitement, although NVIDIA has been, kind of in a range for some time now. But when you think about AI investing, that's often what people think about is NVIDIA, right, or big U.S. tech companies. What are U.S. investors missing on that front?
Well, there's quite a lot. I mean, NVIDIA is obviously the key designer of AI chips, and it's extremely important to pushing that market forward. And indeed, I'm going to GTC next week. It's a very important part of my annual calendar, and I'm really looking forward to getting stuck in and hearing what they're up to. But there's a huge number of companies in international markets that actually provide the foundation of semiconductor manufacturing, and again, aren't replicated in US markets. The two that I would point out there are ASML and TSMC. These are effectively monopoly providers of, on the one hand, lithography equipment from ASML, on the other hand, leading edge logic chip production and manufacturing by TSMC. They have extremely large addressable markets. They have very strong competitive positions that are improving over time. And they provide really the backbone of semiconductor production globally. So those are really exciting companies that we're invested in as well.
Okay, so obviously I'm very familiar with Taiwan Semi and ASML. When you think about the AI trade and growth beyond AI, because there's obviously been concern about disruption from AI, more obviously on the software side, but there's been gyrations there. Where else do you see opportunities beyond that?
I mean, I think when you're looking at growth investing for the long term, which is really what we do, we're trying to think about what the world is going to look like on a 5 to 10 year view and what sort of fundamental secular trends and changes are going on in the world. AI is obviously a tremendously big one. So when we're looking at disruption from AI, we're thinking about companies that are either able to withstand that disruption. So for example, luxury providers like Hermes, that's a company that's been around for 200 years and is probably going to be around for 200 years more, if not longer. We're thinking about companies that are going to benefit from the disruption by AI. So something like a Shopify, for example, which can provide the store of records, the most up-to-date inventory management system for smaller merchants who may want to interact with AI agents and use that as a source of demand for themselves, for example. But there's other trends and other secular changes going on constantly as well, and those haven't changed. The digitization of e-commerce. It's something that we all use day to day, but globally, e-commerce is still just 20% penetrated within retail. So that's still a tremendous seam of opportunity for us. The digitization of other markets, like, for example, Spotify providing music to people around the world, and its ability to take a freemium product and convince people to pay more as they use the product more through audiobooks, for example. These are all secular trends that, regardless of what's happening with AI, are also going on underneath the surface and are very exciting for us.
So tell me a little bit more about your views on Shopify, because so far this year, that has been a big underperformer. On a year-over-year basis, it's still strong. Why do you think there's still opportunity there?
Again, we're thinking about what the world is going to look like in 5 or 10 years' time. And the reality of the structure of market equity returns is that there's a very small number of companies that actually deliver value over long periods of time in equity markets, both internationally and in the US. So what I tend to go back to is, out of something like 40,000 companies internationally from 1990 to 2020, just about 100 of them delivered half of the value creation in that time. So there's a very small number of companies that can actually genuinely outperform over long periods of time. The corollary to that is that while these companies can do that, when they do so, there are multiple drawdowns in their pathway to delivering that outperformance. So whether it's a Shopify, whether it's a TSMC, whether it's an ASML that has delivered tremendous returns for our portfolio historically, all of these companies have had drawdowns over periods of time, in some cases in excess of 50%. And that's just the price you pay when you're looking for these outlier exceptional companies. That's what you have to do when you're investing active growth, long-term equities.
Let's go back to the point you made about, the luxury brands and just, I guess, structural growth stories there, with Hermes being around for 200 years, expected to be around for another 200 years. Obviously, the consumer is key to that. We have this conversation here in the U.S., as I'm sure you're very familiar with, the K-shaped economy and the, high-end consumer being strong. What do you see in terms of consumer trends globally?
I think there's definitely a bifurcation, as you say. So on the one hand, you have companies like Hermes and Ferrari, for example, where you have extremely long-term aligned management that are able to effectively ignore the market for long periods of time and control supply, and therefore continually able to increase pricing over time. So you've seen that with Hermes, and the fact that their bags have outperformed the S&P 500 at some points in time. You've seen that with Ferrari and their ability to continue increasing price and drive personalization revenues as well. So that's one side of it. The other side is there is a strong consumer and demand for lower priced products. For example, L'Oreal is a position in our portfolio. And that's a company that's hoping to continue to increase its market share in the US. These are effectively affordable little luxuries that people are always going to want to purchase. So definitely a bifurcation and something that we think about.
Literal luxuries like the lipstick indicator. All right, Paulina, we'll leave our conversation there for now. That's Paulina McPadden, investment manager of concentrated growth strategy at Bailey Gifford. Have a great weekend. Coming up, time for Options Corner. We'll chart and trade Meta after news. It's delaying the launch of its next AI model. Morning Movers will be right back.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400.
We live? 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 I think so. Oh, my hair looks crazy. So,
No, it's not going. Please go. Please go.
of course, the pajama traders get the inside day and down.
Invest your way with Schwab.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vardis and connect with me on LinkedIn or Instagram for more.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
We're back on Morning Movers.
Today, but not impossible. I would maybe say it's probably going to be like quasi follow-through day if you do get it today. As an idea, what would that be? From previous day's close, up 1.5%, give or take. You'd still be closing right around that resistance point, right around in here. So, I mean, it's a good question, Jeff. Is it possible? Maybe.
All right, Rick, take us through the trends you noticed in this chart for Meta.
Yeah, Meta not having the greatest time lately here. Meta, part of the communications sector, not the tech sector, but underperforming it. 21.5% is the XLC ETF. Meanwhile, Meta up only about 8%. When we look at the Mag 7 as a group here. Oops, sorry, wrong chart. We'll just move on there. But Meta is one of the ones that's really underperforming this whole arena here. And, the news that came out about Meta today, really even more than just this AI model being delayed. A major fiber optic project that they're working on that takes place in, a very difficult part of the world right now. The Persian Gulf, specifically the Strait of Hormuz, is being delayed now. So delays on a big project, AI model not really working. working. Not the greatest pieces of news we're seeing today here. So when we do look here at our charts, we can see that our trajectory here trending downward, giving us more of a triangular shape right here. 620 would be a notable gap level here. 600 as well, giving us some of our relative lows. And finally, down here, we saw a longer-term low near 583. So to the upside, we can see that 680, our red line here, a notable low point that we established here, then became high points several more times going forward. So that also stands out as a potential upside level of resistance. Finally, here as well, too, a notable spike to the upside. We did make a couple of closes above that point, but 710 was never really breached with any kind of strength or lasting effect here. So now when we look at our moving averages that we follow, we can see that our trajectory here has been kind of sideways recently. Our area that we have been trading within are kind of like shorter term range here. We have our moving averages mostly coalescing around 750 roughly here. So yesterday's session brought us below all of them. So now we have a confluence to watch out for in those moving averages. We can also see that the RSI, our measure of momentum, has started to slip below the 50 midline here. So again, not the greatest pieces of news for this particular name. So now we can also see here our volume profile study shows that we have a notable trading activity area here between about 630 or so to about 670. Our point of control, the area of heaviest trading as well, comes in right near 657. So those would be some key areas to watch out for from a volume perspective here in this name.
It should drop down right
All
there.
right,
It should
so let's
nestle right
get
down there.
through an example trade. What's the approach you would take?
Right, given the not great news flow we've seen recently, the stuff being delayed till May, the avocado project, looking for a more bearish trade for our May expiration. +1 May 15th, 620, 600, 585, put butterfly at a 265 debit here. So a bearish outlook, 63 days to expiration, max loss, debit paid of 265. Max profit, if it were to expire right at that short strike there, would be 1735. So our break even, they come in at 617.35, so 2.2% to the downside roughly here. Expected move during that time frame, about 9.5%. So this would be looking for a swing to the downside with our strike prices based on some of those notable supportive horizontal areas that we highlighted earlier here. If we were to reach the 585 level, 7% to the downside, our profit would cap out here and we would avoid the risk of turning it back into a loss like a conventional butterfly.
All right, thank you, Rick. Appreciate that example trade there. And thank you so much for joining us today on Morning Movers. I'm Diane King Hall. Download the Schwab Network app. It is available in the App Store and tune in 24/7 on schwabnetwork.com. Stay with us. You've got Opening Bell with Nicole Petalides up next.
It is there. From here, I would think, what's the next idea? Well, if you're going to get a balance range breakdown, you pretty much need to give up the bottom end of the micro range. Remember that this is just an overnight overshoot, overnight overshoot, overnight overshoot, right? All of this stuff is overnight overshoot. If I just turn off the extended hours for a brief moment, see it, right? Really, the bottom end of the range is here. Overshoot, overshoot, overshoot. No actual sustained price action underneath. Let's turn those extended hours back on. We know the 4-hour trend is in the downward direction. We're all set on that. Everybody all good? Everybody's in the clear on 4-hour downtrend NQ. Seems pretty clear there. Let's take a look at the hourly chart and see what we got. So on the hourly, right, we know that the short-term trend is down, but really we're just in a balance range, and there's starting to become almost too many lines on this NQ chart. It's becoming a little bit more of a headache than it is clarity, but I mean, honestly, the market's still respecting a lot of the lines. You've got sort of, this low holding, and then you have this high of day yesterday. You've got the gap and the single prints above, which is the Sunday night overnight high from back over here when everything kind of kicked off, if you will. And then you have overhead supply at that level. So like all the levels are leveling technically, but it's NASDAQ's becoming a little bit overwhelming in terms of like what's the biggest focus. So if I had to just simplify things, and this is kind of what we're going to do here on the hourly, I'd say as long as we're underneath this, right, sellers are trying to build out a lower high set, and I would just think that the pressure's on the bottom end of the range. However, if the market's going to stay over this area right here, then it's really not all that bad, right? This is that 24.4 spot, the bottom end of that range. And if the market can stay above this, right around this zone, sorry, not 24.4, this is the 24.550 area, 24.550, then really not the worst thing in the world, right? If this is the entire range, then you're supporting near the low end of the range, right? And this is kind of where you don't want to be. You don't want to be in the middle. You want to be up here and looking for this, or you want to be down here and looking for this. You really don't want to be here, right? So that's kind of what we have on that front, right? I would tend to think that, if you do get this rally rejection in here, maybe that's a short to keep overhead supply, but boy, oh boy, you're in the middle of the range. I wouldn't have grand ambitions of like, this is not the grand ambition of the lower high that gets set here, right? I would say that the grand ambition is probably like, you do this and you fade off a little bit, reevaluate at the 200. If you just chop around and slop in there, not interested. If you reclaim, then probably looking for bulls maybe, right? If we're down here, then fine, we'll give it the respect it perhaps deserves. But for me, I don't know. It's like this is where the bears are right on the cusp of doing something great, and every single time recently, bid, right? So I'm not convinced. I'm not convinced on the NQ. It's been that way for a little while. Let's go to the 15-minute chart. Try to give you something valuable. What do we have on the 15? Notice how we're much closer to breaking out over the value area. Notice also that the previous day's range is a little bit more expansive. We had more of an opening drive off of the literal open, which allows for this to be more so as a lower value area. What does that mean? Why is this worth talking about? Because if the market is going to move higher, then you probably have some degree of a squeeze over the 200 SMA. If you get this move over 24/7, if you get this here, you could probably pinch out and move into that gap range, noting that this was semi-finished structure on the break versus the two-sided value that we have here at the low of day. Okay, same thing, you could take the same concept and try to apply it to the S&P 500, but again, the point is that the S&P did not have this big opening drive to start to the downside. It's not like you have this big thin structure pinch in the S&P, whereas in the NASDAQ, you have a little bit more of that. Okay, so the thing to keep in mind for the NASDAQ in particular is just that if this market can pinch, right, you probably want to look at it in the NQ. You don't want to look at it in the ES, right? That's not that. B-Dog, that's right. Shorts are not getting paid. Be cautious if you're on the short side. Andrew B, joining up as a floor trader. Welcome to the gang. Then we also had Emre. I think it's Emre. Joining up as a floor trader as well. Welcome back to the crew. Appreciate you being up here in the office with us all. So as we could see, the NQ is the place to look for the pinch, not in the ES. If we are just chopping around in here, not much to say. So let's get into the simplified pathing. Let's get the job done here. A little bit luster in terms of a trend on the higher time frame for the NQ versus the ES. The ES is a little bit more clean. As we're thinking about this, here's your chop and slop. Not interested, let it be. Two-sided value area, just dodge. If we're here, maybe there's a pinch up into this area. As we know, this is where the shorts start to step up and look for a lower high on the hourly, keeping overhead supply from the Sunday night open and the earlier consolidation from this week. If the market does this, right, I would start honestly looking for longs down here, not shorts, right? And if you're looking for a short, you want to see this build out and then maybe next week, right? This is like next week, perhaps. Okay. I would also think that this is a possibility here. Let's just draw this in.
It's hard.
Look below and fail. Previous day's low. Back in range. Target top end. Right? Look below and fail there. Those are the ways that I would look to attack the NQ market
lots
this morning.
Of money,
if the market goes like this.
Lots of risk. Lots of reward.
I will change my tone right there. Hashtag IWCMT.
I'd love to be a venture capitalist.
Welcome.
Sounds
Joining
fun.
up as a portfolio manager. Welcome to the crew. All right, let's hit it with some red and green dots. We've got 9:01 on the clock on a Friday. We're doing all right. We've covered a lot of Friday rules already, so that's good. We don't need to rehash that. Let's do this. Let's do this. Let's put a white circle around this one, though. Let's counter trend in the context of still being in a downtrend. Same thing here.
Cost me a
So we
dime.
could say
Who knows me when
green
I
dot,
come
white
to your
circumference.
town?
We could also say green dot
An
here,
investor
white
demands
circumference,
higher expected returns.
and absolutely some red dots stepping up here. Red, red.
An investor
Red.
demands higher
There it is.
demands.
All right, let's hit it with some levels. We've got 24.9.
Alpha.
The next level off the screen, you guys should know this like the back of your hand, but 25, 120 is the high volume print, and /200 is the big major weekly level. That's the next overhead. Okay. As we come in here, the value area high is the 24/7. This previous day's low area in here is at 540, we'll call it.
From a liquidity premium.
Down below on the engulfer low, we have 24.360.
Liquidity premium is the additional return investors require to compensate for
Then
the
these
holding
levels,
of liquid.
maybe,
yeah,
but
yeah, it's the
240.
risk. Since yeah,
And then we have
tie up
186.
capital and may be difficult to sell.
Okay, those are the numbers. That's what we've got out of the NQ today.
But more liquid investments.
All right, screenshot
Treasury
has been
bills.
taken. We've preserved that in the halls. Big stretch today on a Friday. We had snow yesterday.
That's real.
It turned
Where's he
from rain to snow after having 80 degrees the day prior. What a crazy world we live in, huh? All right, that's the market here for the NQ. Let's one big stretch. Grab a sip of coffee, sip and poof. Jay Clark, where's my man at? Where is my man, Jay Clark?
I think we found
GDP, I would say this is
that's
probably
a good,
the not the greatest number
that's a good one.
out
I
of
think
all
we
of the
found a
economic
good,
data that we have seen this week. Now,
it's going to
obviously,
be
this is
another
gonna
one of our
backward-looking, but there are two
weekday
components to really kind of
weekday
focus on. You
streams that
talked
we
about that
visit to.
revision
He
to
seems
the
like he knows what he's talking
downside
about.
of
But we
0.7%
obviously
that
got to vet all
previously
those out as
was
we
sitting
go,
at
right?
1.4% for Q4 growth. That's actually a pretty decent outlier, significant outlier from the typical
Treasury bills are
revisions that
sold
we
at
have seen in the
discount
past. So a lot of
to the face
volatility.
value, and
You are seeing
mature
that come
are
in.
the
And the
difference
reason why we are
between
seeing that drop
purchase
is not
price
only
and
because
par
of
value
imports
represents the
moving
investor's
lower, but
return.
also exports are also
Unlike
being
notes
reduced as well
and
in a
bonds,
fashion that
T-bills
is
are
having an
not
impact
pay
when it
period
comes to
interest payments.
GDP as a
They're
whole.
issued by
Now,
the
Nicole, I think this is actually one of the more interesting data points within this overall report. If you're looking at the
when interest rates
2025
rise,
full-year
bonds
GDP
fall.
growth, that came in at 2.1%. So that was slightly revised lower than the prior estimates. Now, this is the lowest
Using the
annualized
Gordon
growth
growth
rate since
model,
since
GG.
2020, basically COVID-19, where we had that very sharp 6% drop on annualized GDP. If you exclude 2020, this is the slowest pace of growth for the U.S. economy since 2016. So we are actually seeing maybe some fears that we might have a little bit more of a stagflationary environment as economic growth starts to decelerate, but also the inflationary pressures are starting to move to the upside, and the consumer itself, especially if we're kind of looking at imports and exports, are starting to once again kind of level off and decelerate. That's probably a reflection of tariff policy hitting the market, as well as some other factors, artificial intelligence, things of that nature. But you would think that the tariffs would actually impact the goods portion, but the majority of the drop, or the bigger drop, is actually services itself. So keep your eye out on that. Obviously, this is going to be looking back, but if you're kind of looking at it from a historic standpoint, we are seeing a slowing or a deceleration of growth here in the United States. And once again, almost a decade of slower growth here if you're kind of looking at the annualized comps.
I was looking at June and July, 26.5% likelihood of a 25 basis point cut. July, 38.3. I mean, you know it needs to be at least above 50% to even have a conversation that there's going to be a rate cut at that time. So right now, all those people who were counting on 2 and 3 rate cuts from the Fed, they're not likely to see that anytime soon. Quickly, the labor story. Last Friday, we got that jobs report, sort of got buried in all the news.
This is a great question for
we had jobless
practice.
claims yesterday that you and I discussed.
Also known as the dividend discount model.
I
Did
would say
not
the
know
labor
that. Okay.
reports lately have been a little bit mixed. The
Evaluation
BLS
tool.
report obviously seeing
Here's
a
a
massive
hint to help you
reduction
if
in
you get
jobs
through.
being added for the previous month is something that did
Remember
move
that
the headlines
formula
last
stock
week.
value
We also did have
minus
initial claims, which is higher frequency data, continues to actually stay at a
dividend
relatively low
divided
pace,
by
around 212,
return
213,000 claims on a weekly
growth.
basis. Historically, that's pretty low. And then we are going to be looking for the JOLTS number here in the next hour.
D1
Estimates
is
right
the
now sitting at
expected dividend in the next
6.76
period.
million. If you're the Fed and you want to see a cut, you want to actually see that being reduced. We are starting to see that trend when it comes to JOLTS, as that the job openings are starting to be reduced across the board here. That just would highlight that we have a tightening labor market. We may also have a slowing when it comes to spending from a lot of these companies and businesses because of the efficiency gains with artificial intelligence and maybe some of the uncertainty when it comes to the macroeconomic environment, tariff policy, things of that nature here. So JOLTS is going to be a little bit more backward looking. That's actually going to be the January print, so we're about a month and a half behind here, and that'll be the one to kind of capstone the labor data that we've had over the last 7 days.
Yeah, and you know, with a 6 handle, right? I mean, I think that's like, you know, I think about when we had 7 and 8 million, there were 2.1 jobs for every person looking for a job. This is a little bit of a different picture, right? Shows fewer jobs out there, fewer jobs available, fewer
11% minus 5, so that's 6%. So 3 divided by 6%.
Job openings out.
I'm not sure what 3 divided by 6%
Okay, so we'll wait. We're going to watch sentiment and JOLTS today. Kevin Green, great to see you. Jenny Horn, host of Next Gen Investing, joins me now, and I briefly mentioned some down arrows for the 2 earnings reports that really were front and center. We'll start with Adobe. Good morning, Jen.
Good morning, Nicole. And so Adobe, I will say, well, we did know the bar was, I mean, not low going into this report, but I mean, this has been one of these names caught up in some of the downturn we've seen in software. But if you look at the last 3 years, I mean, that really speaks to the initial peak that this name saw from, of course, being one of these early adopters of broader AI. And it's then just really taken down that significant uptrend from, again, like years ago. So as far as expectations, they were pretty low, but obviously even a low bar was not low enough. So results did still beat expectations across the board. We saw adjusted earnings per share of $6.06. That was ahead of estimates on revenue of $6.4 billion, which was also ahead of estimates and rose about 12% year over year, showing this continued demand across its creative and digital experience segments. So AI-driven revenue is scaling quickly. Management did say that AI's first ARR more than tripled year over year, led by the strong uptake of Firefly, as well as their Acrobat AI Assistant and Express. And they also did emphasize that AI is driving some of these paid upgrades and higher tier of subscriptions rather than just engagement, which supports hopefully some real long-term monetization. So subscription growth does still remain healthy. Their total subscription revenue rose 13%. Digital media really continues to be that core driver, and guidance came in modestly better than feared. Management reiterated confidence in double-digit ARR growth for fiscal 2026. That was supported by this enterprise adoption and just broader AI add-ons.
In this case.
So as far as the overall stock today, obviously we're seeing a bit more lagging performance despite actually looking higher in all 4 of our major averages. So this move was more attributed to some of the overall skepticism with some of the near-term upside rather than maybe just like these company-specific issues. Although very difficult to say because Adobe has tried to position itself as an AI friend rather than a foe, but it does seem like as far as content creation and some of the back-end really logistics of what Adobe does, so many do still believe that this will be challenged, not aided by AI. I will say that from utilizing all their tools, I mean, AI does have a way to definitely at least supplement, like, for example, their PDFs and
Clever girl.
But I do still say that there's nothing like the human element of like the Creative Cloud or like Photoshop. These are skills you take a long time to learn. I still do stand by there's nothing that can duplicate a human component of that creativity process. But unfortunately for the average consumer, the average really corporate account, you do have AI creating just more challenges, it seems, for Adobe than necessarily alliances.
Organizations.
Yeah, I think that's a good point that you make. And what's interesting is how the analysts are so mixed. Some very positive, like
I feel like this
Reezuhn with a
isn't
315 target and an outperform. Goldman Sachs has a sell rating and
Son of a
lowered
gun.
their target to 220 from 290. So the analysts seem to be a bit split here. I mean, I saw KeyBank was somewhere in the middle with
that was a rough one.
235, but the stock's at
457
246.
plans
So
are
that's
deferred
lower than where we
compensation
are now.
arrangements available
Thank you for
to
all of that. We'll
employees of
continue to
state
watch that
and
name,
local
which
governments
obviously
and
has
certain
been a
tax-exempt
laggard 1 year down
organizations. They
37,
allow
30%.
pre-tax
Let's talk about
contributions
Ulta
and
now.
tax
Ulta
deferred
Beauty.
growth similar
So
to
also, I'll say
401s.
with some disappointment this morning, frankly. I mean,
Okay,
dropping
just have to
as
know
we did
that.
see that they
State
gave
and
pretty
local.
mixed earnings as far as their 2026 guidance. So when you look at
457
their,
government
initial
and
numbers, we did see that
nonprofit
sales rise
employees.
was
Good to know.
12%. We did
457.
see, at least as far as earnings per share, a modest miss, but again, nothing to be like hugely concerned about.
And
overall,
certain
did
tax
still say they
exempt.
expect net
So
sales
it's not
growth between
just
6 and 7%.
it's not government only.
And
It's
at
government
least the
and
midpoint,
nonprofits.
but that was slightly disappointing.
We
on
have
just
a
earnings,
future
yet
in
also at
nonprofits
the
for sure.
midpoint was a slight miss.
And there's a
But
pun
again,
in
we're
there.
talking like the
You'll know in
range
the
that they
future.
previously given. Now, if you take the updated range, it is
No,
modestly
10%
lower.
early
So
withdrawal
I know that this
key
has
difference.
been the theme of
Got
earnings
it.
this entire quarter.
No
You have to be able to put up
early
good
withdrawal.
guidance, but at least we're also
client
seeing them right
holds
now
with
projected
constant
same-store
shares,
sales of 2.5 to 3.5% now in 2026. That also, again, at the midpoint would be a modest miss. So many had said this was because of the relatively high expectations. There is something to be said about some of these cosmetic or makeup beauty type of retailers where there's the lipstick index. You do still tend to buy these products whether the economy is good or the economy is bad because they're more staples, if anything. And so I was reading an Oppenheimer note yesterday highlighting how they expected nothing but resiliency and solid results. And so maybe that's also why we're
Client
seeing
holds
a bit of
1,000
weakness
shares
when
of
there was perhaps
XYZ
some
stock
upbeat
currently trading at
expectations.
50.
And frankly,
The
they just
investment
didn't deliver,
advisor
continuing to really
recommends a
show
zero
a
cost
very competitive environment. I mean,
collar
they're competing with
using a
major
45
brands as
put
well
and
as
a
like
55.
TikTok Shop, for example. And so it's a crowded
Both
space and
expiring in 3
continuing to
months
see,
if
unfortunately, some
price
weakness
is
this
a
morning.
60 at expiration. What is
Yeah,
the
I'm looking
client's
at,
effective selling price per share?
from April, 309 was the low, straight up to $714. I mean, the stock in 1 year up 82%. There was a time that Ulta was always the go-to name for folks. They loved it. And then it started to falter, last year was
client's
sort of
effective
going
selling
down in the
price
summer,
per share.
etc. But look at it now, pretty
Wouldn't it just be
incredible chart.
60?
And, now I have to pull up ELF. ELF is not the same story. The high was a year and a half ago and then dropped down and has really been bumping around.
We get
So,
7 free per
ELF
day.
right now,
That's awesome.
Face
We're
is no
using all
Ulta
of
Beauty.
these. See, I didn't know this.
Also not any
This
type
question
of
tests your
comparison
understanding
either.
of zero cost
Yeah, all
collar
right.
strategy.
Jenny Owen, great to see you.
Particularly
We'll catch
how it
Jenny later at 1
behaves
o'clock.
when
Thank
the
you.
underlying
All
stock
right,
price
coming up, I can't wait to
increases
speak with
significantly.
Liz
Yeah,
Schneider from
$10.
MarketGauge.com. She always
And the
has
hint here
great view of
guides
the
are thinking
markets,
zero
stock picks,
strategy
big
involves
picture.
holding
We'll be right
shares of
back.
stock and simultaneously buying a put option and selling with a different strike price but the same expiration. The zero cost means that the premium received from selling covers the premium paid by. Yeah.
We walk you through trade
Purpose
ideas
of the-
with structure, risk management.
From options
When you
to
sell a
earnings
call
to
option, you are
volatility
giving
plays,
someone else the
decades
right to
of
buy
trading
your shares at a
experience
strike
to
price.
every
Consider what
With
happens
real-time
to the
insight of
obligation if the
sectors,
stock
we
price
deliver what
rises above
active
the strike price and be called
traders need to
of
stay
the
ahead.
call you sold.
Hi, I'm Alex.
I'm Jane. And I'm his mom.
Would mean
Sometimes
that
you
they don't
know,
want it.
you could have
It's
done
gonna
better.
expire worthless.
Same goes for
probably.
where you invest. Level
There's
up and
certain
invest
call
smarter
caps
with
your
Schwab.
potential upside gain.
Real-time market moves, earnings
Think about-
breakdowns, and trade-ready insights. Follow me on X.
Yeah,
at
think about how you
_Vardas
sold the
and
call
connect with
option
me
will
on
be
LinkedIn
exercised or
Instagram
not.
for
Yeah.
more.
At expiration, given the risen to Yeah. Okay. Yeah, it's gonna 60. It's
Friday
capped.
13th. You can make this a lucky day.
Ah.
And it's our trading
Oh,
day that's
55.
almost underway, and we want to get you ready for this
Stupid.
day.
We
Liz
read
Schneider,
too.
Chief
I gotta think.
Strategist,
Yeah. Okay. Yeah. And this one, it's
marketgauge.com,
capped at
is joining
55
us
because that's the
now.
strike
For the
price.
week, the S&P is down about 1%. It's been somewhat of a wild ride. Some of your themes that you're watching in your mind, like what do you think is front and center now for someone who's investing or trading?
First of all, hi, Nicole.
Okay.
So great to see you.
Stupid down.
Well, you're right. It's so confusing. So I'm trying to keep things very simple. So if we start just with the overall macro and looking at equities, I always like to watch the consumer first and foremost in terms of what's going to happen, even if growth is getting a bid. And XRT, which is my go-to granny retail, has been not only under the 50, but under the 200-day moving average in what we call a distribution phase.
The
It's
primary
also the
difference
only
between
one
a
of the key
accredited
sectors that
investor
we
and a
like to look
qualified
that
purchaser.
is right below the 50-week moving average. This is critical. I
Qualified purchasers have more
think
regulatory
really just look
protection.
at there. If
Accredited investors
XRT
can
can get
invest
back over
in
that 50
three
week, if it's not
C7 funds.
today, then Monday
There
or
is no
Tuesday, that would be
meaningful
around
difference. Qualified,
81.50.
yep.
Would give everybody a bit of a sigh of relief.
Qualified
If
purchaser
it
must
can't,
have
and it
5
we're
million
looking at KRE,
or more in
held
investments is
support, but of course
significant
that's
higher
also
than the
all
million
reflecting
net
private
required,
credit.
and you can
We're
put your
looking at
house on there.
transportation, just hit the 200-day moving average. So those
Qualified
inside
purchasers
sectors are
can
showing
access the
inherent
special
weakness.
shit
So that's
with
number
up to
one.
2,000 investors. Big
Number
money.
two, of course, would be the whole inflation play, and
What is the
I
primary
see things a
difference
little
between
differently
a
than a
traditional
lot of other
IRA and a
people there.
Roth?
I was just reading how, I don't want to leave out the top story, which is oil, Strait of Hormuz, the Iran war now 2 weeks in, Saudi Arabia this morning slashing
Traditional
oil
IRA contributions may be
output
tax
by about
deductible while Roth
20% to roughly 8 million barrels per day.
after taxes.
They're not the only ones. So I know we've put out the strategic reserves and things like that in the IEA. But
Pay later,
how do you
pay
feel
now,
that
and
this
then
story, whether it's the war
you gotta
and
love it,
or
gotta
oil
love it.
Strait of Hormuz, are you particularly worried about how
During
it
the
hits
peak
stocks
phase of a
and or
business
our
cycle,
economy?
an investment advisor would most likely
Well,
recommend
yes, and
that
we
a
can already see the
risk-adverse
results
client
of that. That's why we're talking about the consumer
increase
sector,
exposure
because besides
to
transportation, those two are really going to be the hardest hit by rising oil prices.
peak.
So in terms of what's happening with the oil, as an old commodities trader, I can say that this type of volatility, first of all, is expected. Secondly, oil was already breaking out. If you look back at around $60, $62, if you're going at WTI. So it was signaling to us a month or
Yeah.
so ago, even before the war
Yeah,
really
at the peak, yeah,
accelerated,
it's about
that
to
it
go
was
down.
starting to get more
Is at the highest
expensive.
point, but also
And
the
what,
greatest
of course,
risk of
the
turning
Iranian
down.
war
Yeah,
did was bring
for
it up to
the
these levels over
risk-adverse
$90 a
client,
barrel.
yeah, you want to be
But if you
safe,
look at the chart, it's hard to
saving
assess. So
whatever
if I
gains you
just
got,
wanted to say to people who haven't traded
and
all
shifting towards
oil and want to
defensive
get in, right now,
utilities,
$98
consumers,
a barrel seems to be
staples,
some kind of a
healthcare
resistance. And we're
that
looking at
hold up
support
better
lower
during
to about
downturns.
82
Yeah,
to
increasing
$85 a
cyclical
barrel. So
stocks or
right here where
leverages.
it's
Yeah, you
trading
fuck yourself.
pre-market is kind of a chop
Ooh,
zone. So
and
you
high
have to be
yield
a little
bonds
bit
typically
patient. But
underperform.
yeah, I mean, people are expecting
Yeah,
rates to
okay,
go
when
up
you
because
count,
of the oil. But in the other commodities that have been dragged up, we're still not seeing those classic signs of a hyperinflation. So I'm also not quite as bearish as people are with the rates, thinking that they're going to skyrocket from here. I actually think that we're in a range, and it's very possible we might see at some point lower yields. Historically, we have seen rising oil prices and lower yields to protect the economy.
Let's talk about some of the plays you would do. I mean, what chip names would you buy now? You have some tech names that you do like, and which ones would you recommend?
Well, I was looking at ASML. There was some news out with that today, and it's close to the 50-day moving average, just slightly under. So, I mean, this is
Bullet
a really great
strategy is
time to
most
understand a
appropriate
little bit
for an
about charts,
investor who
because it
wants
was so
maximum
easy up until this
liquidity
point, right? And
at all
now, if you
times,
don't have some
has a
kind of measure
specific
of
future
risk, so
cash
this is a
need. Yep,
perfect
such as
example.
yep.
If we can hold this week's low, and today
Expects
we have a
interest
good day,
rates to be
Monday, I hate
highly
to really
volatile.
establish positions on a Friday,
Nope,
especially
you gotta
given the
pull the, you
volatility.
gotta
But if it
bite
can
the
hold up
bullet
here,
and
I
get
like
some money
that
quick.
one. We're still in Micron. I like that one. I looked across the board. CrowdStrike, in terms of defense, had this big crash. Now it's been basing out. So in terms of the big tech and growth stocks, that's kind of where my eyes are. And I have to say, NVIDIA sold off, but it doesn't look too bad, even at these levels. But beyond that, I mean, we have to talk about crypto here for a second, because I'm just really, really, we've already gotten long, not only in Bitcoin.
Bitcoin, Ethereum, and we are seeing a bit of a run here. Also, you looked at a lot of the memory stocks that I think you liked. And what about a name like Rivian? What theme does that fit in for you?
Well, what's interesting also about the market's very predictable is that when you have rising oil prices, people tend to look out not just to the solar space, but also to EVs. We've seen this in the past. Now, Rivian has been the kind of thing where it looks great, sell it, and when it looks terrible, buy it. And it looked great at 17.5 and of course sold off, and now I think it's coming in below 15.50 here this morning. And at around this $14.50, $15, I just don't see that stock going much lower than that. So this is a kind of an opportunity here maybe to get into what I think is still a growth story over the course of years. Rivian cars, I see more and more of them. They certainly have come down in price. They have new models coming out. So yeah, we're watching that as well.
Yeah, and then you mentioned Solar Edge, also biotech, Pfizer.
Yeah, Pfizer has been really holding up amongst all the volatility. It hasn't really wowed anybody, but it pays a dividend. It's actually not a bad stock to own. You don't have much risk to the downside here, and I think you have a lot of upside potential. And like I said, you get paid a dividend. So that's one particular area of biotech. But biotech in general, some of these companies that do antibodies, there was a blockage on them in the FDA, but the gentleman who was blocking them has now left the FDA. So you should be looking at things like ADCT, Replimune, and other smaller biotech companies that are working on antibodies, because that really is probably the future in terms of treating diseases.
I did want to ask you, President Trump actually said the Fed should be cutting rates right now. The likelihood of cutting rates March, April, June, July, none of those seem very likely at this moment for even a 25 basis point cut. We have a meeting next week on March 18th for the Fed. President Trump saying that the Fed should be dropping interest rates immediately and not even waiting till next week. Some of your thoughts on where you think the rate environment really should be?
Well, yes, I'm well aware of President Trump has been saying that for quite some time, and we've been sort of at a standstill with the rates. So, you know, if I were the Fed right now, I would have to make a choice. We're seeing the labor market have some pressure. I heard Kevin Green talk about the JOLTS report. That will be interesting. We're seeing the credit markets, private credit, having some issues. Obviously, we're seeing the consumer sector having some issues. And then, of course, we're having the elevated oil and then things that are related to oil, like fertilizer, for example. So is this inflation, to use an old Fed word, transitory based on current situation? Do we worry about that, or do we worry about the fact that the economy with the GDP reflecting this, and people talking stagflation, by the way, I think that's a speed bump now to recession. If I were the Fed, I probably would consider easing at this point. And yet we also don't want too much talk about easing, because that could spook the market into thinking that the bonds outperforming the S&P or outperforming the junk bonds is a sea change into recession. So it's a real dicey situation right now.
Yeah, that's interesting how you phrase it. Look, you would consider cutting, but not saying we need to cut and sort of put that fear in the market. Just sort of saying, look, we're going to do a one and done because we have some elements here, and just be more matter of fact about it, but not spook the market. It's very interesting, right? They have to be just right, a Goldilocks sort of tone. And of course, we always know there's Fed speak where we really have to try and figure it out. Mish Schneider, Chief Strategist at MarketGauge.com. Wonderful to see you, Mish, always. Thank you. Coming up, a quick break. We'll count you down to the start of trading, looking like the S&P 500 is going to be down again, third week in a row. We haven't seen that in a year. We'll be right back.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillations.
Good morning. Did I miss something here? Did I miss something here? This is incorrect. Why are we here? Why? What happened? What happened here? Okay. Well, so much for that. It looks like we're not arriving to the office in style today, and instead we will just hang out over here. All right. Interesting. All right. So, let me just pull this over. I was grabbing my coffee, saying goodbye, grabbing my coffee. You never know, right? So, all right, let's do that. Let's maybe come over here for a second. Let me do this real quick. Gotta love it. All right. Yep, Friday the 13th indeed. We've got 8 o'clock on the clock, which is cool. But let's go back over to maybe this screen. And we'll start over here. That's cool. And we'll go from there. So we didn't really, I mean, we missed the fancy arrival to the office, but that's about it. For now, we'll scroll up to the tippity top. We will see what's going on at the tippity top. I would expect Mr. G and some Friday fever. Let's go on up there. Let's see what's happening at the tippity top, and we'll continue along from there. So, Mr. G says, who's feeling that Friday fever? Don't forget to sign up to the like desk if you haven't done so already for complimentary cookies on Mr. G. They go well with coffee. So, glad to be getting my coffee as apparently you guys were stuck looking at some charts for just a second there. No problemo. How about that? What else? Who else? Federico is here. Own worst enemy. I Spy Lunar. The market architects at the tippity top. A friend in the market. Lopafet. Michael Herman. Choice is in the building. Bill Lakeside. To Jim Lewis. Talent 103. Hootie. Tyler Johnson. The Fade Dr. E.T. We've got Nate Dalton. Jarrett Matson. Just Jay today. Seven Sisters. Mr. Monopoly. Chuck 5085. We've got Starman 77. Rooted in Calm. Texas Badger. Patrick B. We've got Tim T-Dog. Who else? Duna B is in the house. Delightful Sunny, Bad Wolf, Dirk Fisher Trades, Steve Davis, Anthony Wu, Nick Farrell, Nigel Bites the Dip. We've got Mike Rosales, Mickey, Dangerous Function 54. You gotta love that. Cipriano. Number 3 is the storytelling prime number, by the way, of today's session. We have, who else? Massive Oxtel, Fish, Fed Tracker Fred. We got Aldo L, Pristine Mountain Painting. It's a classic. Dexter Trades Futures, good morning. Oscar Weiss for victory. We have J Cool Trader, Marview, Danny G, Philip B, Robert Bolton, Random J, Lazo N. We've got, who else? Chris D, Dunning-Kruger, Marcus G, Safe Options Trader, Cooked Intentionally. We've got Steezy in the house. Wall Street Dropout, Isaac, Blue Valley, Utah, Luigi Wicks, Cahilla's in the house, Jim Robitaille, Multiple Manip, Teacher Russell. Who else? Nostradakis, Charlie J. Solar King, Aussie Cobbler. Shy is in the house. Jeremy Storr, Jason Brockman. We've got So You812, JC, our senior news correspondent, is here. How are we doing on time? We've got 8:03 on the clock. Doing fine on time. We have Dogtown Raider, Wizieni, Robert Rudoloff. Who else? Teacher Russell, Alex Cobb, Factory, Lar, Zombie Wolf, Beth Jezos, Christopher Z, American Psycho, Tippity Top in the morning, Tuya, copywritten, pawned, and registered. That reminds me, I should probably sign into my chess.com account and play a couple of the games that I owe some people to move back on. Who else? Desert Dean, Charlie J. We got 8:03 and 49 seconds on the clock. Have 047, Robert Rudoloff, Hazel. We've got Fuzz. Who else? Ashley. Juan is here. Michigan. Let's see. Barry the Baptist. Old Gray Wolf. Robert Rudoloff again. There we go. Let's scroll up. We just got bumped to the very bottom. We've only got 8:04 and 18 seconds on the clock. We're fine. No audio, sound, you're on. Elevator stuck. We did not get the intro. Yeah. Yes. Screen's on. That's all right. That's all right. What else? A glitch to start the Friday. Shut it down. Yeah. What else? What else and who else? Hopefully he says nothing embarrassing. I don't think so. I just think I said goodbye. Goodbye. Have a good day at work. Stir the coffee. Yeah. Did you hear me tapping the spoon on the mug? Maybe. All right. Good morning. Yeah, the intro did not get played. Thank you guys for all the loud concerns in the chat. Just chart updates. No intro. Correct. No intro today. I totally clicked the wrong button. Totally clicked the wrong button. I was distracted. No good. Good morning. All right, welcome one, welcome all. You guys know the deal. It's 8:05. A little bit of a misclick this morning. And we'll just continue to get the job done. We will continue to get the job done. And that's exactly what we'll do. So, welcome one, welcome all. Let's take a look at the economic calendar on today's session. What do we have going on here Friday, March 13th to kick off the week, or to put a bow on the week, really. We've got Friday, 8:30, core PCE coming out hot and heavy. Let's see what we get here. And I really do want to bring up, actually, let's go, not over here. Let's go to this, trading economics calendar. There we go. I just want to grab their calendar. I want to pop this over here. And this way, we actually get the year over year. It might not be considered red flag. Yeah, it's over here. PCE price index month over month, year over year, and then the core year over year. And of course, the core month over month is up here. All right, so I just wanted a little bit more insight into the actual release of the data for PCE. And we'll leave this up on the screen in the background as well. So once again, today is all about PCE inflation data this morning. We could see preliminary GDP comes out as well at the same time. All of this stuff is delayed, by the way. So GDP, durable goods, more on GDP, and more, excuse me, attached to that PCE, personal income, personal spending. No problems over there. 10 o'clock time frame brings us JOLTS, the labor openings here, labor openings and turnover survey. We've got at the 10 o'clock time frame the more normalized preliminary reads on consumer sentiment and inflation expectations. We'll be watching that very closely on the intraday, right? So preliminary consumer sentiment, inflation expectations, these things should probably get a little bit out of hand here, noting that the survey will accommodate the last 2 weeks of data, which of course include the big ramp in crude. All right. So that is what we've got on today's session. That's what's on the docket for today's Friday the 13th session. That's right. It is Friday the 13th. Unlucky. As we head into next week, just to be aware, right, 8:30 next Monday, we do have Empire State Manufacturing Index. That's going to be kind of a nothing burger there. I don't think the market's going to care too much about Empire State Manufacturing. Really, next week is about the PPI and the FOMC, of course, all happening on Wednesday. Main event here. Wednesday, 2 p.m. We also get a new SCP, by the way, and a press conference from Jerome Powell, of course. All right? That is the big deal for next week. Let's keep an open mind to that. And speaking of an open mind, let's take a look at the Fed Watch tool, which has a very closed mind right now for the probability of any type of cut going out here, especially in the next meeting. There was a tweet or a post or whatever you want to call it. There was a something that happened yesterday where a certain someone was urging for an urgent emergency rate cut. Oh my goodness, bring down rates right now. It must be done in the next meeting. Wednesday, you have to bring rates down. Well, I think the market is saying not so much. Right? So 99.3% odds of a pause and keep it. Whoa, whoa, whoa. Take a look at this. Take a look at those odds. Now we're pricing in one cut into the very back half of 2026 here in the month of December. So it looks like forget about June, forget about July. There is no cut at all until December as of the pricing odds right now. Interesting on the Fed 2-year, or not the Fed 2-year, but the 2-year bond pricing that out. And the Fed funds futures also suggesting the same. Whew, wow. Okay, sayonara, kiss goodbye your rate cuts, right? really not going to happen anytime soon. Certainly not this meeting, not the next, and even not the next after that. I'd say that June is pretty much in the bag right now in terms of a pause until further notice. Oil would have to really start to come down materially. It seems like the market has started to price that in more seriously through the Fed odds here at least. Let's take a look over at the earnings calendar. After the close yesterday was Adobe, Rubrik, and SentinelOne. Last I looked, Adobe was moving lower. I did not really pay too much close attention to the cyber names there. So Adobe, worth maybe an eyeball as we come into today's session. Let's take a glance over at the top line figures, courtesy of CNN, and nothing really before the market. Better, maybe. Let's really take a glance through the top line figures, courtesy of CNBC. What do we see on this morning's session? What do we got? Straight across the board, we are not dealing with unison, but rather division. We've got the Dow futures up 45 basis points, S&P futures 43 basis points. We've got the NASDAQ futures up 42 basis points, right? We've got the oil futures down 241 basis points, 93.42 on the barrel price here. And the U.S. 10-year is backing off ever so slightly, down about 1.4 basis points, 4.259 on the actual yield itself. I actually love the Fade Dr. ET's helmets there to kick things off on the top line figures. That's perfect. Absolutely perfect. Buckle up, put your helmet on for sure. Absolutely. So welcome one, welcome all. Top line figures, put your helmet on, buckle up. We've got an interesting little uptick in the broad market and a downtick over on oil. Even as we're about to see, the headlines, they don't really side well with exactly a lower oil situation, but hey, price is what pays, right? So oil holds near $100 as Trump says that America has ammunition and plenty of time to fight the war. It doesn't seem to be what he's been saying through other avenues, which is kind of interesting. He seems to be saying like, nope, we're very close to the end and it's going to be over as soon as I say it's over and we're going to be done soon. And so that's a little bit of an odd headline in my view. Modi reaches out to Iran in terms of energy crunch fear. That's reasonable in terms of being a neighbor and wanting to, of course, make sure they have enough energy. And, a lot of those, people, it's India, it's China. Those are the biggest importers of Iranian oil. What else? U.S. misadventure in Iraq has no clear exit strategy. That's a comment from Russia's UK ambassador. So just more commentary about the war that continues to wage on, even though, I think originally it was proposed to be this very quick thing, like what happened with the nuclear sites into the end of the summer of 2025, and clearly it's not really that way. You could see, here we go, 301 probes into 60 economies over forced labor trade practices. Of course, we saw that headline yesterday as well. 4 crew killed in the U.S. refueling plane that crashed in Iraq. That's quite sad to hear, of course. That's not really what I don't think that's what anyone really signed up for. So we'll leave it at that and we'll continue along. Yeah, frustrating, right? What else is going on here? Stock specific stuff. Let's see what else. Traders monitor oil prices. I mean, that's fine. That seems normal. Adobe, Coinbase, Ulta Beauty, NEO, and more. NEO caught an upgrade this morning. They had an earnings announcement just the other day. What else is going on here? Adobe is probably it. Coinbase not on earnings, but just on crypto strong overnight, notably Bitcoin. Wells Fargo upgrades discount retail chain Ollie's. I'm going to pass on that. MLB team valuations of 2026, not stock specific. Okay. Let's see what we have here. Palantir's technology gives the West a critical edge in the Middle East, Alex Karp says. So PLTR playing a key role. The stock clearly is exhibiting relative strength and trading more like a defense company rather than a software company, right? So it continues to toe that line very oddly, if you will. Adobe CEO is to step down after the company installs a successor. What else? Footing the AI energy bill. Say no to data centers. Okay. Biggest names missing from America's top philanthropic list. What else? Stock-specific stuff. Ulta Beauty. Oops, what happened there? Glitch. Ulta Beauty drops as the company reports mixed earnings, gives 2026 guidance. There you have it. Tech download, sector's Iran problem, temporary purchase of Russian oil set to stabilize energy markets. Fed interest rate cuts are rapidly fading away. We could see that. That's a great picture of Jerome Powell there. That whoever editorial staff, well done on the image selection for today on that particular headline. What else? Upgrade to NEO. We know that. Improving profitability, new model launches. Navy will escort oil tankers through the strait when militarily possible. Besant tells Sky News. So that promise was sort of comes with contingencies, I guess. What else is going on here? Stock-specific stuff. companies buying back, or I should say investors buying back the software stocks. Okay, stock-specific stuff. Come on. Underemployment we talked about prior. All right, that's it. Kind of a disappointing slew of headlines this morning. Breaking, Pete Hegseth on the Strait of Hormuz says you don't need to worry about it. You can see it up here at the very tippity top of your screen, way up there. See the arrow pointing way up there? You don't need to worry about it. Okay, I guess that's it, guys. We don't need to worry about it. It's over. That's it. All right. Let's go from here over to the screens, and I know that's kind of where we preemptively landed for an awkward 3 minutes of just nothing happening. Apologies for the misclick this morning. I don't know how that would have happened. Usually the sequence is chained. I must have maybe clicked the mouse pad and I don't know, something happened. But anyways, grab a sip of tea, coffee, water, whatever it is you've got at the desk, and we'll see you at the screens. The futures chart maybe it's the futures, maybe it's not. I didn't really have the moment to ensure that it was going to be the futures screens, but we'll fix it regardless of where we land. I'll meet you at the screens. Again, grab a sip of whatever you got at the desk this morning. It is a Friday after all, and we'll get the show on the road. Here we go. All right, grab a sip. I'm grabbing a sip right now. My cup is overflowing with coffee, literally. There it is. Let's go from Thinkorswim on the Spiders daily chart over to where we need to be, ES futures, but let's go up to a 4-hour chart. There we go. It's looking a little bit better here. Let's pull this down a little bit. There we go. See the price action, a little bit more clarity. All right, I think we're in business. I think we're where we need to be. And we'll keep going. So, all right, what's going on here from a 4-hour trend perspective? What do we see as it relates to this market and where ultimately things are set to either land or not land? Well, as we know, we are on a 4-hour downtrend. That remains the case. That does not change here. As of this morning's open, we have highs, we have lower highs, we have lower highs, we have lower highs, we have lower highs. And it's very possible, right? Even if we give a counter trend rally, you could still set a lower high. And where would the ideal lower high be, right? Where's the ideal lower high? I think it's becoming a little bit more clear, right? Anything underneath this little zone right here, beautiful lower high, keeps the trend in force. You probably even have a trend line confluence there. Look at that. Beautiful. Anchor, 1, 2, right? Nice little rejection there for a lower high to be set. And as long as the market can roll off underneath that, we will remain in a downtrend. I think I have a one little ground of coffee in my, not getting stuck in my teeth, but see if we can just wash that down. No, you're going to grow a coffee tree inside you, right? It's like when you swallow a watermelon seed. Parents used to say, no, you're going to grow a watermelon in your stomach. Anyway, this lower high at the trend line absolutely makes sense, and it would keep the trend down. That's kind of the first and foremost thing that I'm looking at here on the ES higher time frame, right? As we scroll in and zoom in here a little bit, is it reasonable that this is going to happen, right? That really becomes the next question. I think it's, it's somewhat probable. You're not really opening in a detrimental location relative to the Thursday situation, certainly not pressuring the overnight low from the Sunday night session, and you're sort of tangled up here at the daily 200 SMA, right? So is it possible that we get some kind of like what would a very basic situation look like if we're going to go for the counter trend? You probably need to just be inside prior day's range, excuse me, and then over previous day's high, and you're here, right? That seems to me like the most obvious way to get there. Just use prior day's high as your gatekeeper. You either do this and you're here, right, looking at the level in the face, and you're saying, all right, now it's time to start looking for shorts again, lower high, or you just kind of hang out sideways here today and you don't really do much. Now, that's also a possibility. Keep in mind, we will get data coming out in about 12 minutes. 12 minutes to go until we get PCE as well as GDP, right? Those two numbers will be coming out very shortly. So on the 4-hour chart, main takeaway, in a downtrend, and of course, room for a lower high with room to spare here, okay? 20 SMA rejection as that slowly comes in a little bit today, and even into early next week, it's going to be right there, okay? So that is what we've got there. In terms of where does a major reversal happen? Where am I like, oh my God, check this out. The market's going to be, long and strong straight up to new highs. You would have to just invalidate that 4-hour lower high. You'd need to really start to see some action here, and then probably a break over the Sunday night war overnight high over here. That's 68.56, right? You can see all this week we've spent time below that level with a perfect rally rejection there on the, that would have been Tuesday's session, right? Tuesday was a perfect lower high up against that exact level. So again, if keyword, if there is going to be a strong bullish reversal, you're probably here, you're here, and then you're looking at confirming when you're taking out this high, right? And keep in mind also that this looks like a big lower low, but the Monday low, the regular trading hours low, is really over here, right? Somewhere right around in there versus the overnight session. So I guess the point being is just like this is kind of setting up as a bit of a regular trading hours equal-ish low right around in here as of yesterday, okay? So you'd have equal low, higher low, and then you could maybe start to call this inverted Man Ray pattern, right? Something along these lines here. Okay, so that's if. Let me just put another big asterisk on the screen because everybody seems to get all fired up when we start talking about, you know, the if situations. This is if the market's going to reverse. Now, like the general course of action here, as we've just already stated on the 4-hour, is that the 4-hour trend is down. And if you rally in here, you're probably looking at a rejection back down to the 200.
That's funny.
Right? And you just continue to look for a drift in the downward direction. Okay.
All
right, let's take this and let's go on down to an hourly chart. Let's continue along through the different time frames here and see exactly what we've got. In the short term, you've got an even shorter term trend line, right? You've got this kind of situation happening here. And you'll see as of this morning's open, we're kind of right at it. So, you know, not that I'm a huge fan of trend lines, but could we be breaking the short term hourly trend? Maybe. Maybe. It wouldn't be unreasonable. And again, if we do that, you're probably looking at a 4-hour counter trend to set the lower high here, right? So the hourly drifts into an uptrend. You set the 4-hour lower high, and then you look for more downside. The market's really going to crash and burn. That's what the sellers want to see. All right. On the hourly chart, aside from that, where are we opening? I mean, look at the forecast open here and look at yesterday's price action. Just absolutely horrible price action inside that chop range. I mean, if you made it out alive from yesterday's session, trading the index product, I should say, if you're trading individual equities, there were some really nice moves right off the open, actually. I'd say yesterday was one of those rare feelings where, oh my God, you know, it's like, is the market trending again? Do we actually have some reasonable downside coming into this market, right? That's what it felt like yesterday morning. But at the index level, you really didn't go anywhere. So I would say very neutral through here and not overcommitting directionally based on just this consolidation and chop. It is bearish consolidation. Value is undoubtedly lower from the prior day. We also have an unfilled gap here, which is tangled with the single prints, which still have not closed all the way, making a nice green bar on the screen. So yellow's the gap. Cyan is the single prints. And as we could see here, I mean, it's very reasonable that once again, if you're just chopping around in here, you could start to put pressure on that. There's thin structure to retrace. Now, if you can go gap fill reversal and you just get a pure play lower high here, the hourly trend will remain down, right? And you won't even get to this area up there for the 4-hour lower high. So that's the counter argument. If you're more bearish than I am, I shouldn't even say than I am, just if you're more bearish, period, then what you're looking for is a gap fill reversal, single print reversal, right? You would say like, okay, just maybe a quick look above and fail on the previous day's high, close the gap, and then we're just immediately back off to the downside.
Dang it.
That's what the sellers want to see, right? And I think that makes some decent sense. I wouldn't really argue with that. Doesn't really sound all that bad. So that's what we've got on the ES futures up against this range right around in there, and this range right up in here. We know the difference, right? This is the 4-hour lower high, and this is the 1-hour lower high, just like that. Okay, those are the two spots that I'd be watching like a hawk for today's session on the upside. If we take out previous day's low, I'd say kiss it goodbye. Look at the overnight low, and then look, of course, to overnight low is Monday's low. See this over here? But then I would say look to the overnight low, which is here, the bearish engulfer, which is the same level we've been talking about, 65.90, as we know. No change to that number right there. Okay? All right. That's that. Let's take it down to the 15-minute chart. 15-minute chart. Let's see what we got going on over here. On the ES15, we can see the balance range. Again, this is a two-sided value area. That is a true value area. It's not a mathematical one, and that's exactly where we're set to open. We'll get into the 3 questions, but I'm generally just trying to illustrate here that the pre-market has already made this attempt to move lower, dramatically failed. So I'm not really convinced that stronger sellers are really going to lay into this thing, especially with crude not going out to a new high. I've added one level to the crude chart here at 98. That is the Sunday night open from this previous weekend, right? And you can see the market just continues to back off of that rather than break out in a meaningful way over it. So if crude's going to remain underneath 98, market's pricing in, okay, things are getting better, or at least this was overblown, right? It's Remember, the market is all about expectations. This is like pricing in the worst of the worst of the worst. Things actually may have gotten worse, but if expectations haven't gotten worse, if expectations were just met, then, that's kind of explaining why you're getting your lower high potentially here in crude. Anyways, let's not get too wrapped up on the minutia and nuance of that, but the point is that crude is no longer acting as a huge headwind to the market, a new headwind, I should say, right? It's more about new and novel rather than something we've already known has been a problem for the last little bit. Okay, so once again, the main point on the 15-minute analysis before diving into the 3.5 questions is just that these sellers overnight are not really not as aggressive with crude making a sort of lower high. Okay, that's that. Let's jump right into the 3.5 questions and get the job done here for this morning's session. What do we have as it relates to the 3.5 questions? Here we go. Let's just make sure we could see a little bit more in the way of price action. We could see that previous day's session. Yeah, I mean, that's going to work for me. I'll do that. So we have a little bit more room to draw off to the right. Fantastic. Got it. Got the coffee ground. It has been removed. All right. Isn't that just so frustrating when you're just stuck somewhere in there? So let's take a sip of the clean coffee now, and then let's get into these 3.5 questions. Sarah, appreciate the note there in the chat. Bring back the MFEU scale. That's correct, right? We talked a lot about that when it was tariff time. We could talk about it now with the crude oil and what's going on with the situation in the Middle East. So we've got MF over here on the left. Let's just do it because that's a classic. We got the MF and the EU scale, right? So MF and then it's really capital U, little e. But anyways, and then right in the middle, you have sort of like complacency, if you will. So maximum fear is kind of where we opened up on the Sunday night futures for crude. And I'd say as of right now, crude is like, we're somewhere over here, right? The MFEU scale, ain't that the truth? Sarah Weston, classic. Love it. Love it. Absolutely love it. The MFEU scale comes back to life. Where do we go when and if Trump says something like, okay, we're done with our operations over in the Middle East and that's it. Like everybody's coming home and, we'll no longer have any assets in the region or something like that. Not that we would never have any assets in the region. I can't really imagine them saying that, but you get the idea. Market in terms of oil pricing would probably go back over here, right? Euphoria. And for crude, of course, euphoria would mean lower prices on crude. Now, remember, there are going to be some more, dare I say, permanent disruptions to the oil industry, right? This is not really just like in one day, blink of an eye, everything's back to normal. If all the headlines that we've been reading and all the reports we've been seeing, I mean, we're talking about some pretty serious destruction of oil facilities in some cases, and it's not just going to be like, again, flip a switch and a week later everything's back online. So that is that's just something to keep in mind. Like euphoria here might not bring crude back down to like 50. Oops, I don't want to do that. Probably not talking about 50, but we might be back down towards like 70 bucks a barrel, 65, 68, something along those lines. Just something to keep in mind, right? Anyway, that's that. Let's jump into these 3.5 questions. Let's get the job done. It's a Friday. You guys feeling good? Stormy, what's happening? Speaking of classics, what's going on? You couldn't have timed that one any better. Let's keep moving here. Let's see what we got going on. 3.5 questions. Number one, where are we opening relative to the prior day's range? We are opening smack inside of the previous day's range. Boom, right in the midpoint. Let's go neutral on question number one. Can you guys feel it in the air? I can feel it already. I know exactly what we're about to draw. Number 1.5, what do we have here relative to the previous day's value area? Here is the value area right there. Smack in the middle. Now, another neutral indication. Okay. And you bet your bottom dollar it's coming out. We're drawing the P for patience pedestal, and it will be located down here. A nice wide base on today's session. Look at that. Beautiful fluting
uses beta
on the column. Nice and wide base today. It's not too narrow. We'll come in with a nice spiral. A deep inside cut out to this. Yep. Looks good. Nice symmetry happening here.
Last question of the session. So
beautiful symmetry today.
I
mean, that, come on. Come on. You mean to tell me freehand? The symmetry there? That's pretty damn good. Let's come in like this. Let's come in like this. Let's go one in the middle. And then two more on the right. Uh-oh. Oh, no. Sorry, too wide. Didn't accommodate enough room for the central. Oh, jeez. Don't fail me now. Don't fail me now. If you're new here and you're like, what the heck is going on? What, this is not trading. How does this relate?
At the end of the day.
Don't you worry. I mean, that's really not as symmetrical as I'd like it to be.
Wait,
oh, man.
The order has to be
I guess what we have to do is just distract the eye, and we'll pull it even further out with two more happening over here.
The next...
Two more happening over here, and suddenly it doesn't look half bad, right? That works. That works. That's not my finest, but it does work. A Doric or an Ionic, you call them. And then, of course, what goes on top of it? I mean, it's only half the effort to draw the pedestal itself, but my God, of course, we know this is the P for patience pedestal.
I forget
which
the
means,
time periods and all that, so I guess it's closing up. It's at the end of the day.
Beautiful. Let's get a little bit of serif action going on here.
Oh,
that's some of the best work we've done in a while.
Close.
Some of the best work we've seen in a long time out of the office.
That's 50.
I mean, just lovely.
What time is it? 50 questions. What's
beautiful? Let's do a little bit of this. Square that little serif up.
That's a third of the test.
Yeah. Yep. Nice. Nicely done.
I think it's like
nicely
questions.
done.
So 100, so that's like a third of the test.
P for patience goes on a pedestal. That is a beauty
about an hour
on today's session.
All right.
Whew. 8:30 PCE data is out. Let's see what we get on PCE.
That's not that
see if
bad.
it changes the course or the calculus of any of this information.
All right, 4%. It's not that bad.
That one can go in the gallery for sure.
Right, now we gotta get back.
That is gallery worthy.
Let's get back to our stuff. We gotta go back to the money.
Of all this data that we've been getting this morning, and of course we have more on tap for you in just a little second. S&P 500 currently trading at 67.17, 0.7% higher. We've got tech back in action as well, 0.8% higher for the Nasdaq 100. The Dow putting on 300 points this morning, and the Russell 2000 is also looking perky. In fact, our outperformer, of course, as the market is boosting bets of at least one cut this year. We'll discuss that throughout the course of the program. Let's take a look at where foreign markets stand, how Asia wrapped up the week. As I mentioned, relatively calm out there as well, given the wild swings we have seen in some of our Asian markets over the last 2 weeks or so. The Nikkei 225 closing down 1.2%. A lot of attention on dollar yen this morning. I'll talk about why later in the program. The Hang Seng Index down 1%. Chinese equities have been relatively insulated from what we've seen going on just because of their energy situation, but of course also to do with some of the tech stories there. We've got Baba out with earnings next week. The FTSE 100 currently trading still 0.6% higher, and the DAX is also firmer as well, as we continue to see oil prices pulling back here, and that is helping out some of this risk sentiment for us this morning as we head into the weekend. But of course, anything can change. The 10-year yield has come off a bit, 4.24 right now on the benchmark, given some of the data we got this morning, and of course that is looking relatively tamed, you could say, as far as the CPI, or the PCE, I should say, is concerned this morning. The inflation picture at least giving maybe the Fed some headroom as they figure out the broader implications of the inflationary pressure coming from
still
Iran.
within the first
US dollar
hour.
index
We gotta
continues
wait
to look
about
firmer
30
for
minutes.
us this
We
morning.
wait until the end of
99.75
the
on the
last
Dixie. That is
end of the
putting
first
gold
hour.
under a bit of pressure
And
across the
usually
metal
it settles
space
there. We
this
need
morning
this
as well, with the
bitch
firm
drop,
greenback.
though.
We're at
Drop
51.08
just
now
for
on the
one
yellow
day,
metal. Crude
50
oil,
cents.
the big story, the big
And
chart
then you
we've
could
been
go
watching
to the sun.
for weeks now, and that is at $94 a barrel.
Drop 50
So we've
cents.
come off, of course, but still elevated.
And then
The big question
we'll
is
go to the
how
moon
long
again.
it stays high.
Come on.
And
Let's
Bitcoin
go at
catching a
war.
bid this morning as we see a little bit more
Go
risk
up
on in
after
these
the war.
markets. 4.5% higher at 73,000 and change. So it's actually been a good couple of sessions for Bitcoin, suffice to say, this week. So let's give it to Kevin Green, who joins me now for a breakdown of some of the data we're actually getting at the top of this hour. KG, we've got Jolts, also Umish. Just talk us through what you're seeing there on the screen.
Well, if you're looking at JOLTS or the job openings, now this is going to be for January, so it's a little bit of a delayed report here. That actually came in at 6.94 million. She was looking for 6.76 million. So we actually had a better than expected JOLTS number that did take place here. We also had a revision for the previous month as well that was revised slightly higher. So for the most part, if you're kind of looking at the labor data, I would say it's a little bit mixed. We had the BLS data that was a little bit weak last week with those revisions to the downside, as well as that massive drop in job jobs
Right.
being lost for the
So
previous
yeah, we're
month.
pushing an
Initial
hour and a
claims
half
were
right
still,
now. I
trending
think
at around
that's going to be
212,
about our cutoff
213
time from now on.
thousand initial
Hour,
claims on a weekly basis. Historically, that's actually holding
hour
up
and a
here.
half
And I would say if we're kind of
to
looking at
hour and a
jolts,
half to.
you're seeing a slight increase,
But yeah,
but
as
nothing
always,
that's really
thanks
too
for
monumental for right
financing
now.
with
So I would say
Reezuhn.
mixed
Listen
picture when
to
you look at the
Reezuhn.
labor data. We also have the
Protect
University
that
of Michigan
principle. Let's go.
consumer
Not
sentiment data.
emotion.
That was actually
Reezuhn.
better than the street's expectations, coming in at
So,
55.5.
till next
She was
time,
looking
it'll
for
be a couple
55
days though. You know, we
even,
only do
and that is a
weekdays
slight
finance
decline than what
with
we saw
Reezuhn's
for the
weekdays.
previous
But
month
then
in
everything else,
March,
listen to
in
Reezuhn, debate with
February,
Reezuhn,
which that number was
laugh with
56.6.
Reezuhn will all
But if you're
be
looking at the one-year inflation
pretty much
expectations,
every
that
day of the
actually
week. We'll
did
try to entertain
come in
y'all.
lower than the
But,
street's expectations
you
at
know,
3.4%.
even the money sleeps
Street was
sometimes
looking for
too. The markets sleep,
3.6%.
we sleep.
Previous number 3.4%.
Spend time with the
This may
family.
not capture, probably
You
does
know,
not
take care of your
capture
health
the
and all
full
that too.
impact of what
All right.
we have seen with the Iran
Peace.
conflict.